Welcome back here with us on Trading Hour, and the market's still sort of, flirting around with a bit of the green. There's been some red, but there is buying at lower levels. That's the short point. Chirag Mehta from Quantum AMC is with us to talk about, how they're positioned on the market as a whole. Chirag, hi. I was going through your fact sheet, the April note, and what really stood out was that it seems that y'all are very happy to take on board all the strong macro cues, all the good numbers on GST, etc. But I think the moot question here, the principal question here is valuations and how much is still left on the table. So let's start there. Your view on this big rally.
Yeah, so we are very positive on markets rather than markets, it's economies where we find a lot of comfort in terms of momentum that is there in the economy. All the macro indicators suggest a robustness in the economy. So we are pretty positive on the economy per se. But much of the good readings that we have or the positivities in the economy are priced in most of the sectors. So overall, from a valuation standpoint, there is little comfort in the market. The upside potential that we track of the portfolio has been declining. Stocks have been doing well, but the upside potential on account of that has been declining. So, but there are pockets of opportunities that we see in the market where we are positioned very well. For example, the pockets of BFSI, especially the private banks, is a good position that we have across our funds. We still think that that sector has not participated as much, and there is a lot of room from a valuation standpoint, from a growth standpoint, to benefit by positioning that sector. Also, we like auto and auto components as a space. We think there is a lot of demand momentum in that that we would see going forward. And that would lead to the leg up in terms of that sector participating. We have seen some up move in autos, but we think there is still further room when it comes to auto and auto components as a whole. And third thing that we like from a sector perspective, which we may take some time, but it's great time from a valuation standpoint, is the IT sector. The discretionary spend is still not picking up the like way we'll do it. Will want. But overall, we think that as you normalize your numbers going forward for the IT sector, for example, in the US, banking, there has been hardly any spend from the banking sector over the last 2 years, which we think will pick up going forward. And as that happens, there will be a lot of normalization that will happen in the numbers, which will allow us to benefit from positions in the IT sector as well. So these are the three top themes that we like from a valuation standpoint as well, and also from a growth perspective. And hence, we are positioned in these sectors optimally in our portfolios.
So you said banks, autos, and IT are your top three preferred sectors, right?
That's right.
Okay. What about metals? Have you trimmed positions in metal names? Because there is one half of the street which believes that there is a super cycle underway. Base metal prices have been rising, notwithstanding the recent correction that we've seen, but generally commodity prices have shot through the roof. So where do you stand on metals?
So on metals, there is a economic momentum coming from the capex plays that are happening not only in India but elsewhere as well. So there is a demand, plus the rebuilding that is happening because of the greening of the economies. That is also leading to increased demand for metals. Also, earlier we used to see a lot of supply dump coming from China, which is not happening because of the capacities going down or being shut because of the environmental regulations. So there is not much supply acceleration that is happening, even though prices are holding up well or going up. So from a supply demand standpoint, there is a momentum from a demand perspective, and prices are holding up well or moving higher a bit. We are not so positive on the prices continue to go higher, but demand momentum may continue from here on. So we do have some exposure to metals, but much of the demand positivity is already in the price to an extent. But certain names in the steel sector, for example, we do like and hold in our portfolio.
Okay, so Chirag, those are some of the sectoral sort of thoughts. Just from a market cap perspective, how are you looking at the mid cap, small cap market? I mean, the entire market is up and about, and now the Nifty is also hitting fresh highs. But incrementally, what would your advice be? And I'm talking about a medium to high risk investor here, not the low risk variety. But for such an investor, would you be comfortable with the increased allocation to mid and small, or is large cap the way to go?
So certainly the valuations in large cap are still better on a relative basis as compared to mid and small cap. Mid and small cap look a little stretched. But in a small cap, when you're approaching that space, you have to be more stock selective as opposed to having an aggregate approach in the small cap space. And in that, we do see certain pockets of opportunities where we are positioned in the small cap. We do hold some cash in the small cap fund. That's because we don't find enough opportunities to deploy that cash. But to the extent we have good names within the small cap space where we are positioned onto. So in that, industrials as a sector. So industrial as a sector overall looks very expensive, but there are pockets that we see there is still momentum left. We do like IT even in that, and BFSI in that space as well. So there are pockets of opportunities within small cap space, but on aggregate, it looks pretty expensive from a valuation standpoint. So from a market cap landscape, large caps look the best in terms of valuation positioning. Within the small cap, you have to be more selective. There is a lot of growth that's coming to companies in the small cap sector. There are certain unique ideas or unique themes that you could play in the small cap sector, which is not available in the large caps. And hence, you need to allocate more to large caps, but also have some positioning in the small cap space as well.
Okay, got it, Chirag. Chirag, before we let you go, I mean, the other hat you wear is obviously an expert on the precious metals market, and you've been watching those markets for a very long time as well. So before we let you go today, just over there, I mean, the headlines have been absolutely scintillating. We were just discussing the rise in silver prices with Manisha as well. What's the advice to investors? I mean, if someone is feeling a bit of a FOMO, they haven't had a proper allocation on gold and silver, from an investment standpoint, then does it still make sense, or is it just too late?
No, I think this still makes sense. But what we are seeing currently is some unwinding of the geopolitical premium that is getting priced in. So we're seeing some correction in gold, and probably there could be further some correction, but the downside seem limited from here. What's really driving is the macro forces with terms of one is geopolitics, and another is unsustainable debt levels, etc., and the subsequent turn in rate cycle, which is a driving force for gold and other commodities as well. So we think that if there is any dips that you get in gold markets, probably they should be bought into. We are up for pretty decent 2 to 3 years out there as rate cuts happen. Debt still remains a worry for many of the economies, and as the economy slow down, there could be further support and a U-turn from many of these central banks out there. So we are positive from a 2 to 3 year outlook perspective on gold markets. Downsides will be limited and should be bought into.
Okay, all right, Chirag, we'll leave it on that note. Thank you very much for joining in and giving us your views on the market. We'll take a break right now, come back on the other side with a lot more. Quick programming note for our viewers. Join us live on 31st of May from 5:30 p.m. onwards for CNBC-TV18's Future Female Forward, the Leadership Circle, a transformative platform where leaders from diverse fields would venture beyond the traditional discourse and share stories of grit and determination and the road less traveled. This Leadership Circle is not just about business strategies and professional accolades, it's also about delving into the depths of the personal journeys of these trailblazers.